My name is Sunil Madhu. I'm the founder and CEO of Socure. Socure is a fraud prevention and identity verification company based here in New York. We're 2 years old, post-Series A. And what we do is we use real-time online and social checks to help businesses figure out if their customers are who they say they are. Now, when you sign up for a bank account online or you open up an account at a merchant website, behind the scenes, transparently unbeknownst to you, all of these businesses are taking information about who you are as you sign up, and then they pass that information to credit brokers and credit bureaus like LexisNexis and Experian and Equifax and so on, who basically check the information about you against offline data that they collect about us over the last 20 years. And that process of verifying who you are hasn't changed for over 2 decades. And there's multiple issues to do with that. So I'm just going to quickly switch over to this deck. So here's the kind of size of the problem here. Last year, $18 billion was lost to businesses due to fraud, to identity fraud specifically. You might have read about data breaches happening almost every other week, and they're still going on today. Because of the ease of availability of information about who we are, because of data breaches and so on, it costs about $2 to buy, on average, any of your profiles, including social security number, physical address, phone number, and other details of the web. In fact, you didn't have to commit fraud yourself. You can pay someone to do it for you and collect that information. Now, compounding this problem is the problem of acceptance. So right now in this world, 3.5 billion people, or roughly 51% of the world's population, are millennials. They're people under the age of 34. There's very little information about millennials offline. So the traditional model of comparing a young person's information against an offline database at a credit bureau isn't going to pan out. Consider also that there are 70 million unbanked people in this country, people outside the banking system. There are 180 countries around the world without credit. So how do you make risk decisions? How do you lend to people? How do you onboard your customers with the assurance that they are legit and they're not going to defraud you? On day 0, when a new customer signs up, understand you have no information about that person to be able to trust their mobile devices or click flow or payment behavior. So we decided the internet's 25 years old as of last month. Most people today use mobile applications everywhere in the world. Social networks have saturated the online populations of the world today. So why not use that data for good? So this is what we do in our product. You typically go into a website, you sign up. You're all familiar with the sign-up pages. You fill out forms, you type in your name and address and stuff. And increasingly, a lot of different sites are allowing you to open up accounts by just clicking login with Facebook or Twitter or Google. We're agnostic to the type of onboarding, so we don't really care whether the website uses social logins or not. We work regardless. So typically, the site adds a line of code to the business logic and the onboarding flow for the customer. And they call us just like they would call an Experian or an Equifax, and they pass us information about the customer signing up. And then in real time, we take that information and we search over 300 different sources of social signals online. That includes all of the major social networks in the world, mobile applications, identity aggregators, people search engines, and so on. And then we take that data, we deduplicate the results. We do things like facial recognition to connect images. We do geodesic distance to connect people on a globe based on data that we can put on a globe. We do a variety of different sophisticated things behind the scenes to weed out these profiles, and then we apply behavioral models based on age group, gender, and demographics. And this is where we look at the social proof. Because while it's easy for me to steal your identity for $2 and then use it without your knowledge, what is much more difficult for the fraudster to accomplish is recreating the authentic social proof each one of us creates through the normal course of living our lives. If the fraudster had to create of the 1,001 connections I have on LinkedIn over the 20 years I've worked so far, and they had to recreate the friends and family connections and the followers on Twitter, and they had to create the social proof around this fake profile, that would be very difficult for them to accomplish with a lot of money and even with botnets. So we use these signals to figure out if the identity is real, if the identity is synthetic, or if it's been stolen. And if it's been stolen, we stop that. If the identity is synthetic, we stop that identity from being utilized and misused without your knowledge. So this is typically the ROI for our customers. they get a pretty large lift using our solution. The cost value benefit for our solution is roughly $1 million in cost for over $30 million in savings annually. Our business model is to sell APIs. We charge from a revenue model perspective per transaction with volume discounts and discounts for prepaying annually on a subscription-based model. And we sell into the market directly and indirectly through our channel partners. We're actually the credit bureaus, as it turns out. Our solution works on day zero. It's been tested across the board by issuing banks, card networks, payment gateway providers, the credit bureaus themselves, with data from over 100 countries, and it's been proven to outperform models that have been developed over 20 years. So, like I said, we're 2 years old. Our solution's patented. We raised $4.7 million today in our Series A, as of last October, I should say, through FF, Founder Collective, and 2 Sigma. We have established OEM partnerships through channel partners for the credit bureaus to sell us globally. We have a variety of different customers who have already rolled us in production, 15 contracts in hand. We've signed the world's largest remittance companies. 5 of the top 10 issuing banks are in our pilot pipeline right now. We've got 2 of the largest payment gateways, 4 of the large credit bureaus, etc. Customers. Our team comes from some of the best names in the market. This is my 5th company. And our team has more than a few gray hairs, if you will. We come from a security background in banking and so on, which allows us to do what we do really well. And our vision really for our solution is wherever you need a trusted identity, no matter what that domain is, if it's gaming or it's telecom or commerce, you can actually use our solution to ensure that your customers are trustworthy, that you're not going to have fraud, and that you're going to be able to allow more good people into your system, and that you will be compliant with things like KYC and anti-money laundering regulation. So with that said, I'm going to give you all a quick demo of the product. So Socure has a dashboard, and we have interactive APIs, so you don't even have to write code to test out our product. So here, for example, I'm going to pass in to our API a very sparse input, an email address, a first name, and a last name. Now you can pass a variety of other inputs into our system as well, including things like user IDs, company names. If you're trying to, for example, underwrite a loan for a small business, you want to make sure not only the business owner is legit, but they're associated to the company on behalf of which they're borrowing. So we do those type of checks. You can pass in physical addresses, IP addresses, geolocation information if it's mobile applications, mobile numbers and tokens, and national identifiers, including social security number, etc., and date of birth. And when you do this, and I'll just zoom in so you can see better, what we do is we come back in real time with a bunch of information. So we give you a risk rating. It's a number from 0 to 10. Bigger numbers are better. This is a risk rating on whether the identity is trustworthy or not, whether it's real or it's fake, that is synthetic made up, or it's basically stolen and modified. We provide you metadata and data that gives you an indicator of what are the risk factors behind this identity, positive and negative ones. And we also do a prediction on fraud. Now, normally, when you onboard a customer, you have to wait 30, 60, 90 days beyond the onboarding event to find out if the new account that's been created in your system is fraudulent. It takes time for things like chargeback fraud to be reported by the original card owner, for example. So it'd be great if on the initial day you're bringing on this new customer, you can get a prediction. We're able to do that because our customers actually feed data into our system. They don't just consume information from us. Our customers feed data about who's committing fraud in which industry in real time. And using that and big data learning, machine learning techniques, we've created an AI that learns on the fly based on these different types of fraud tags that we get to be able to predict that the new customer you're onboarding shares a lot of features with people in the past who've actually committed that type of fraud. So we also, for justification purposes and manual review, because fraud is typically caught with the help of computers and a bunch of people who sit in front of computers and search for your name. To help those people in the manual review team reduce the amount of work they have to do to justify the results. We also take all of the public URLs that we've processed, that we've resolved, and taken into account in our computation for their review. And we also make a prediction on whether the input variables, in this case, email address and name, the variables that are passed in go together really well online and socially. So in this case, we can say that the email address is trustworthy and goes with that name. That's our product. We provide, as part of our product, BI tools as well, which allow you to introspect fraud and slice and dice it by various different types of demographics and gender, and age group and network types. And for the manual review team, there's also additional information that they can use in our dashboard to provide feedback into our system about whether the transaction was a false positive or whether there was a person who committed fraud and therefore should be blacklisted. That's our product in a nutshell. So when you're thinking about validating your customers' identities and you want to identity assurance, no matter what the application is, no matter what the device is, please think of Socure. Thanks very much. So I'll take some questions. Yes.
Great product here. I have a question. First is, you mentioned about like maintaining list of frauds.
Yeah.
Do you maintain like data custodian across all of your clients?
Yes. So all of the customers' data in our system is isolated. Data is encrypted with FIPS 142 compliant encryption using hardware encryption modules in our system. We have over 20 years of security experience in our team, so we've imbibed the lessons we've learned building systems for banks in the solution. And we keep data for customers isolated, but our machine learning algorithms learn across our customers' data. So when a fraudster perpetrates a fraud, they're not just attacking one institution, they're attacking 100. Yeah. And they want to maximize the impact of that fraud in the shortest period of time before they're caught. So it helps to actually learn about behavior, about fraud, across customers. So we do that.
Sure. Thanks.
Yes?
It's pretty clear your solution saves time through automating a process. But have you guys had a chance to run kind of tests of accuracy?
Yes.
And it seems that, obviously this could be used in conjunction with the client onboarding system that a company already has, but especially in the cases where one might consider using it in lieu of the onboarding process and authentication process that a company has. Can you talk about the accuracy of this compared to the traditional?
Sure. So the objective in onboarding is to reduce friction with the customers. You want to make the experience as simple as possible. This draft that I've got up on the screen, this is about 1.5 years old now, but I put it there for a good reason. When we first developed our model, a version 1 of our model, the very first credit bureau that tested us out was a company called ID Analytics. And they basically compared our ability to connect online and offline data and to predict fraud compared to their own solution, which they've developed over the years. And their solution is a kind of a flagship solution, if you will. Their models have been used in the industry by lots of different other bureaus. So the line on the green line up here, that's the performance of their model. By the way, in order to test fraud systems, a very simple thing. We use a technique from signal processing in physics. And what we do is do a signal to noise ratio comparison. So on the left side, this y-axis represents actual ability to catch fraud. On the x-axis, that's the false positive rate. Now, if the system you're testing is crap, you'll get a line right there in the middle because it's a 50% chance of getting it right or getting it wrong. So most systems that work properly produce a curve. It's called the area under the receiver operating characteristic curve. This is what that is. So if you look at the green line, that's the area under the curve for the solution, the proprietary old solution, 0.76. And the Socure solution, the new solution, version 1.0 of our product, that's 0.79. If you combine the Socure solution and the legacy solution, you get 0.82, which is a really good mechanism of capture, because that means that at that, say, point in the curve, that represents your capture rate, this represents your false positive rate. So you can capture 80% of the fraud with less than potentially 10% false positive. The industry ratio, by the way, is that for every one person you're catching for fraud legitimately, you're rejecting 15 to 20 people for false positives. So anything you can do to improve that is a benefit to your business. Yes?
Can you comment how you differentiate yourself from competitors? How, as a new company, you launched your solution,
Yeah.
And and built your pipeline and got your first customers and got traction in the marketplace?
So we did a lot of market research. Our competitors and our company kind of formed roughly the same time in 2012, post-summer. We spent a lot of market research sort of studying how to attack the market. We didn't want to follow the rest of our competition. Most of our competition goes and chases after e-commerce companies, and there are millions of them. We decided not to focus that way and focus on financial institutions. A couple of reasons. 85% of all merchant transactions, all e-commerce in the United States, occurs over 10 issuing banks. So when you consider commerce, you have multiple parties in it. There's the person, there's you buying something, there's a merchant selling something. Then there's the issuing bank that gave you the credit card or debit card you're using to make the purchase. There is a card network over which the transaction flows. There is a payment gateway on the other side of the shopping cart that's processing your card. So we figured if we go and get our first to market advantage and we use that to embed ourselves in the infrastructure in these financial institutions, then we can have a pretty good barrier to defensibility, commoditization essentially. We could create a good defensible barrier that way. And that's what we did. We differentiated ourselves in the business model. We were also the first company from a technology perspective to create a technology that not only worked in the world today, but also will work in the world tomorrow. So for example, only less than 14% of websites today, merchant sites and so on, actually employ social logins. No bank today allows you to do that in this country. In India, for example, 3 out of the top 5 banks allow you to open up bank accounts with Facebook today. So that's a trend that I think is going to happen later on. But we wanted to create a technology that would serve the market today in the same way it's being served, so no change in privacy policy, terms of service, and we were the first ones to do that, so much so that our competitors actually called us to license our technology. So there was a question back there. Yes.
Yeah, a really cool concept. I guess my question is, it's kind of a basic question, but for people who are signing in or logging in on just a traditional form without a social media login, which sounds like that's the majority of the cases.
Correct.
To a lot of banks. How do you access that social media fingerprints?
So it's a good question. So on one side, we get public data when we use the APIs of the social networks based on a search. So if I were to search for you on a search engine, or we implement our own, I might find a URL for you on the social network pointing to your profile. So we take that URL, we end up resolving it, calling the social network API to get whatever data we can. So we get public data on one side. On the other side, we get private data fed in from our customers. We also get private data from processing tokens, bearer tokens. So we've tied up, our partners include 2 of the largest social login service providers on the internet today. And so they've provided technology to allow you to log in with Facebook or Twitter or whatever to hundreds of thousands of sites and mobile applications. We are embedded into that technology. So when you log into the Wall Street Journal with Facebook and you go through Jan Rain's product to do that, we're the ones doing the identity proofing on that login. So the consumer gives consent to access, for that website to access some portion of their data, and that generates an OAuth2 bearer token that's passed into our API. We're able to use that to go get a private view of that profile, which you would not get from a public view. We combine all of this together through algorithms and stuff in our system.